The US-China trade war never really ended, it just evolved. With the Biden administration maintaining and even expanding Trump-era tariffs, China's economy is feeling the pressure. But how is Beijing responding? One major move, buying gold and quietly ditching the US dollar. What does this mean for the global economy and the future of the dollar's dominance? Let's break it down. Since 2018, the US has imposed tariffs on over $350 billion worth of Chinese goods, targeting everything from steel to semiconductors. The Biden administration has kept these in place, even adding new restrictions on EVs, solar panels, and tech exports. The goal? To protect American industries and reduce dependency on Chinese manufacturing. But the impact on China has been significant, slowing exports, disrupted supply chains, and pressure on economic growth. China isn't just taking the hit, it's adapting. Here's how. Beijing is pushing trade with Africa, Latin America, and Southeast Asia to offset losses from the US market. China's dual circulation strategy aims to rely more on its own consumers rather than exports. China's promoting the yuan in global trade, signing currency swaps with other nations to bypass the dollar. While avoiding direct tariff wars, China has restricted rare earth exports and US agricultural imports. But here's the most aggressive move yet. China is stockpiling gold at record levels while reducing its exposure to the US dollar. The People's Bank of China has added gold to its reserves for 18 straight months, amassing over 2,200 tons, making it one of the world's largest holders. Gold is a hedge against inflation and dollar instability. If the dollar weakens, gold retains value, giving China a safe asset outside US control. China has also been quietly reducing its holdings of US Treasury bonds, dropping to $770 billion, the lowest in over a decade. This signals declining confidence in US debt. The message is clear. China is preparing for a world where the dollar isn't the only game in town. Here's where things get risky for the US. If China accelerates its gold-backed yuan strategy, it could encourage other nations to follow, eroding demand for the dollar. BRICS nations are already discussing a gold-backed trade currency. If China leads this shift, the dollar's dominance could weaken over time. The dollar is still the world's reserve currency, and China can't move too fast without hurting its own economy. Still, the long-term trend is clear. Diversification away from the dollar is underway. The tariff war is now a financial chess match. The US wants to protect its industries, while China is building a safety net beyond the dollar. If China succeeds, we could see a slow but steady decline in dollar dominance, replaced by a multipolar system with gold and the yuan playing bigger roles. But for now, the dollar remains king. The question is, for how long? What do you think? Is China's gold strategy a real threat to the dollar, or is the greenback too entrenched to fail? Let us know in the comments, and don't forget to like and subscribe for more deep dives on global economics.